Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Wendy Nunnelley. Wendy, thank you for joining us.
Thank you for having me, Hall.
Well, good. So what was your background before investing in early stage startups? What did you do before that?
Yeah, so I'm an angel investor and I invest my own money, but I started investing when I had a day job at Coca-Cola. At Coke, I got to work on everything from startup businesses to billion-dollar brands. And since Coke, I've joined the other side of the beverage business in the alcohol space, still at a very large company, but I've continued and even expanded what I do with the early stage companies as well.
So your job at Coca-Cola led you to start up investing in this sector. What's your advice for people that are starting to invest in startups? What would you tell them?
Yeah, I would say specific to consumer products, startups, because the environment in CPG is becoming about more smaller brands compared to the fewer mega brands of the past. My advice for people investing in this space is to expect base hits rather than home runs. There aren't a lot of CPG unicorns. That doesn't mean you can't get great returns. It's just not going to be probably an Uber or Airbnb. It'll be more of those base hits. My other advice to someone investing in consumer goods is to consult someone with experience in CPG before investing. We're all consumers, and that can make us all feel like we're experts. And many times I've heard of early investors getting burned by investing in, say, a food product that tastes good without really understanding the industry dynamics. And then the last thing I'd say is that it can't be overstated the importance of people in a startup. I've invested in companies where I was not so sure about the product itself, but I knew the founder was top notch and would figure it out. So I invest not just in the brand, which is important, but even more so the people behind it.
So how do you see the CPG industry evolving? It seems like it's changing very quickly, but where do you see it going?
I think the growth in CPG will continue to be driven by the smaller brands that meet changing consumer needs. Big CPG in most categories has pulled back on launching new brands to address consumer changes and instead shifted to acquisitions, which is a great opportunity for investors. Something I look forward to keeping a close eye on is the rise of direct to consumer. Several of my portfolio companies have pretty significant direct-to-consumer businesses, which I expect to continue to grow. I don't believe it will completely replace regular retail, even brick-and-mortar retail, but I think direct-to-consumer is an important trend.
So how do you see the investing landscape changing in the CPG sector? Are there any new trends for investors that you see in this space?
Yeah, an interesting thing for investors in CPG is that more and more non-CPG investors are getting into CPG. So, for example, folks who used to invest pretty much only in tech now are digging into CPG. And the result of that is that the valuations are rising and bigger investors are getting in earlier and earlier, which pushes forward that kind of entire investment cycle where you have big CPG acquisitions happening at previously unheard of revenue levels with fairly small companies being acquired. But, it's consistent with the trends I talked about earlier with where there are more smaller brands versus fewer mega brands. So it can be more challenging now for small early investors like me to get in before the bigger guys jump in, which is why having a vibrant network that you nurture and you're able to get into early deal flow is really important for CPG investors who write small checks.
What is your investment thesis for the sector as an angel investor?
Yeah, my ideal investment is a consumer goods or services company that delivers to underserved consumers, even in ways they don't yet know they are underserved, and is led by underserved founders, for example, women and minorities who have less access to capital. So I look for an investment where I can bring my big company experience to the table to help those founders and the small company get off the ground, scale, and exit. Not every single one of my investments fit that profile, but it's my guiding principle.
How did you come to that thesis over the other ones that are out there?
Yeah, so most of the big CPG exits that we hear about are because a brand figures out a way to serve consumers in a way they didn't even know they were being underserved. For example, Dr. Pepper bought Bai, and the way I believe they were serving consumers is that the person who wants that energy jolt but wants it to feel very natural. So I don't think consumers realized that they were being underserved there, but Bai really delivered on that. So serving consumers in a way they don't know they're being underserved and then executing on that promise with excellence. So that's part of my thesis. And then I layer on the better than average returns from women and minority led companies and my desire to be involved in these small companies. And I really felt like I had a winning thesis.
And so are there any examples in your portfolio or companies you know that fit that thesis?
Yeah, a few of the companies in my portfolio that generally fit that thesis would include Cooley Cooley, Four Sigmatic, and Tomboy X. Cooley Cooley does moringa based products that deliver on some great health and wellness benefits. Four Sigmatic does mushroom based products that also deliver great health and wellness benefits. And then Tomboy X has a great fashion brand that serves a different consumer than the mainstream fashion brands would have served in the past. So those are three brands that fit my thesis pretty well.
So every sector has its challenges. What do you think the big challenges are for the CPG industry and what's going on in this space?
I think a couple of the challenges from an investment perspective. One is that because it is the era of these small brands and there are so many of them coming up all the time, picking the winner is not easy. You know, even picking the one that will get that base hit. So because it's so much churn, so much innovation, just staying on top of that is a challenge as an investor. Another challenge that we have with CPG companies as an investor is that a lot are able to raise those small checks and get to, call it 500,000 to $1 million in revenue, and then they kind of get stuck. I'm not a lead investor. I do this on the side. I write fairly small checks. So I try to reduce that risk by looking for founders who I believe will be able to get over the hump and raise enough capital to push through and scale. So that means they can build a team, they can build a network around them to make it happen, which applies not just to fundraising, but really all of the day-to-day battles that CPG companies have.
Well, and every sector also has its risks. In the technology world, the risk is that the technology doesn't work or it doesn't scale. Well, what do you see as the risk inside a CPG space that you think investors should be looking for?
There's a risk of, and this is a very basic thing, there's a risk of getting on the shelf, but not pulling off the shelf. So it can sometimes look very good that a product is on the shelf in many retailers, but you really have to keep in mind, is it pulling off the shelf? Because that really means that a consumer wants to consume the product or wear the product or whatever it is. So I think a risk for investors is to make sure you're not looking just at getting on the shelf, but really focused on getting off the shelf.
So which subsectors in CPG do you see as immediate opportunities to pursue? Where do you think the winners are going to come from?
It's a tough question. And there are some trends that have been around for a few years that I think will continue to be really important. And one that I really like is plant-based protein. I think that continues to be an opportunity. There are a number of companies that have gotten very big investment in this space already, but I think there continues to be some white space to pursue around plant-based protein. Other additional opportunities is there's just a lot of innovation, and I think there's not enough innovation around packaging that gets investor attention. So I think innovation around packaging is really important and can allow small brands to exist at a premium and really be viewed as an opportunity for an acquisition.
You mentioned earlier about the trend in direct to consumer. Do you consider that a place for innovation, being able to sell through online means as being a competitive advantage over those who can't? And where do you think that's going?
Yeah, I think it's going to continue to grow. So it can really be a competitive advantage. You know, if you think about some of the big CPG brands that are out there, they are typically not great at selling online and typically have little direct to consumer presence. So if you think about food and beverage, which is near and dear to my heart, not a lot of the big food and beverage brands have a great direct to consumer presence. So being able to innovate in that space and being able to make it work, which by the way is also more profitable than selling through retail, I think could be a very attractive target for a big CPG who kind of hasn't figured that out yet. I really do think it's a competitive advantage.
Well, in the few minutes we have left, what else should we cover that we haven't so far?
I think the crux of why big CPG has become so acquisitive is because consumer needs aren't being met, and there's a lot of talk around that's not health and because they're not health and wellness focused, or because they're not, customized to individual consumer preferences and all of that, which is true. But I try to stay focused on kind of the core issue that big CPG has, which is that they're having a really hard time getting consumers to pay higher prices. And that's the core of it. So these small brands are offering health and wellness. They're offering a personal experience. But at the end of it, they're doing that in a way that causes consumers to want to pay more. And that is something big CPG really struggles with and makes them very attractive. So I think as big CPG is scouring the marketplace to find that new acquisition, which makes it a great payout for investors, I would really focus on what brands are getting consumers to pay more in a category.
Very good. Well, thank you for taking time to share that with us today. How best for the audience to get back in touch with you?
Yeah, please connect with me on LinkedIn. I'm Wendy Nunnelley, Nunnelley, and you can check the spelling of my last name in the show notes. I'd love to hear from listeners and connect and continue to talk about CPG investing.
Well, great. Well, thanks for joining us today, and hope to have you back for a follow-up soon, and appreciate your taking time.
Yeah, I'd love that. Thanks a lot, Hall.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Hall T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.